The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Tuesday morning, and I'm supposed to be in New York on Thursday morning, and don't know what's going to happen there with the Bloomberg event. But if you're headed up that way, please excuse some of the confusion. Been living in a cave. There's a major blizzard going on here, and we're gonna probably be able to sort this out today. I guess it's not as big as they thought, and the situation on the flights. Probably going to hold true for the Wednesdays and Thursdays of the world. I think today they just pre-canceled everything. So stay tuned. I'll keep you up to date on that. If you want to email me, if you got any questions on it. A lot of things going on here this morning. Got basically the S&Ps are down almost 200. Got some earnings type shocking situations going on. Caterpillar, Pfizer, Procter & Gamble, Apple's coming out, a couple other things need to pay attention to. But the first thing we're going to do, we're just going to take a look at the S&Ps. And we talked yesterday pretty much religiously about this 2052, 2053, 2051, that general neighborhood. And why do we talk about that on the futures side so much, being the resistance level along with this 2027 down below, which we actually hit a low of 2025 yesterday. So why do we do that? So before we had this 2027 area that was super important, lining up on a couple of time frames, and then the 2052 area. The reason we picked that out on the intermediate to short term is because there's that 2051 area on the 240s, the 253 area on the dailies, and then on the 60s, actually, we had some action here yesterday right in there, as you can see, 2052, 2053. So we had a triple time frame confluence around that 2051, 2053 area, and actually looked at that as meeting targets from yesterday, and also a chance to pick a battle with stops above, giving it a little bit of room. Probably for me, the 56, 57 area is probably going to be appropriate for stops on that, considering that we've got a good chance to float down here, and the risk reward scenario is pretty high in my opinion. You got 2027 as targets down below right now. We're trading 2034 as of the time of this report. And as you can see on the 240s, you've got 2023 and then that 2027. So that's going to be the general neighborhood of a target-rich environment, but that doesn't mean we have to go there in one fell swoop. So be aware of some volatility along the way there on that one. The shortest term that we can find here now on the 60s, you got short-term retracement resistance back up into 2043 if anybody cares about that. Okay, that's the 60-minute, and that's for day traders out there. So anyway, got the pound moving up a little bit. Got the euro moving up. The pound, we talked about the retracement target yesterday, and it actually worked for just a little bit here, as you can see that 150.94. We kind of closed. That was pretty promising for me on the short side, actually. But then stops have to be in order above 150.94 on the British pound. And now this thing, it seems like with the euro climbing, we've got this in your favor here. Here's the euro. Obviously the dollar. I'm just gonna take a wild guess that we're inversely reacting to those currency trades here. Remember, the dollar is comprised of 6 different currencies. The euro's 30 to 33%, somewhere in there. I forgot what the latest calculation is, but here's the 240s on the dollar. You've got downside targets and support, and we talked about putting trailing stops in on this, right? Yesterday wasn't something that you want to use 240s normally to regulate the trade up. You've got a huge wide box here on the dollar. Next support on the dollar, 93.67. And that's kind of a wait and see, I think, on the dollar at this stage. Just the fact that a 240 box has appeared yesterday was a bearish sign in itself, as Eddie was talking about. Here's the 60-minute on the dollar, 95.07. That's going to be a little bit of a lid there in resistance area on the dollar. Okay. Sorry about that, guys. Here we go. Taking a look at the yen. Yen obviously a little bit dollar sympathetic here. The situation on the yen, hold kind of just a wait and see. Got support at 116.67. Talked about that yesterday. Nothing new there. The usual suspects. We got to look at gold here before the first break. Then we're going to get into some of these stock plays. Here's the newest inflection points on gold. And we talked about getting a new profile. That's why we're bringing it up here before we get going too far here this morning. Yesterday we had the orange bar. We talked about a new profile appearing and new levels we can pay attention to. 1266 on the bottom, 1307. You still got that major 1295, 1303 lid up top that we talked about was targets. But support now is 1266. We've reached a low today already of 1272. So we may, we're kind of right in the middle of a fair auction. Nothing to really leverage off of here. Here's a long-term view. Let me just make sure we're good here. Okay. And the shortest term view here, the 60-minute, you got short-term leverage, 1281 support there. But again, we're kind of in the middle of a fair auction on the 240s, the dailies. Not a lot of leverage there, and I'm waiting for 1266 as a pullback to consider myself lucky if that happens. Silver, similar situation, just kind of bouncing around below that 1830 resistance area. Beans, we got to take a look at these because this has been something I'm personally interested in. We've got 983. A lot of bearish news is starting to come out on beans too. 983, we've kind of closed below the, last week. We're going back up and retesting. This may be a shorting opportunity, but long-term players, you've got kind of a DMZ between 83 and 98. I know that's a big range there, but picking a battle at 83 and then maybe trying it again around 998, $10 a bushel might not be a bad idea on this particular instrument. I think they're going to let the air out of this thing a little bit farther, is what I'm hearing, actually, from some fundamental guys. But I like the technical setup too, so it's something hopefully we can get some mileage out of. Let's take a look at Pfizer. Something that's rattling around this morning. Pre-market trade 32.50. Healthcare, we talked about in a research report I put out. And let's just kind of pull up the healthcare sector. I put this out as a really, really strong buy. And I know, hey, okay, well, tell me something I don't know. This is something against the, and I'll pull up the research report after the next break and show you guys. This is something that was just right. This is our long-term weekly view. You can't find a stock that just is showing, or an instrument that's showing any more strength in the XLV. And this is kind of a safety play too, and kind of, volatile times. People are just looking for safety. 69.34 is that support on the XLV, and on the dailies, as you can see, we kind of have, it's been qualified as a strong instrument by the profiles. But let's go back to Pfizer, and let's take a look at this. And we got some inflection points, 32.23 and 32.45. So that's the good news on Pfizer. You've got a dual time frame confluence. This is the weekly. The last chart was the daily, that you can orient stops around. And pre-market, we're trading 32.50. So kind of hanging around above those inflection points. For long-term traders, remember, still, you're going to be, still qualifying this as a relatively strong trade down into 30.74 and that actually kind of matches that weekly unfair low too. So again, you got decent support now. You got really good support a little bit lower at the 30-50 area, general neighborhood. All right, we got Apple. Got to take a look at it. This is coming out. I think this is coming out today. Let me verify that. Just look at my list and my notes from the. Yes, after the market. Okay, yeah, I was wondering if it was pre-market. It's after the market. All right, so the inflection points to pay attention to here. Here's the shortest term that you can even think about on Apple. Really tight range, 112.38, 114.08. So what do you do with this? I think obviously you got to wait and see. Here's the daily inflection points that you've got to pay attention to. Let's see, 109.70. We've talked about that quite a bit. And on the weekly, targets above 119.75. So that 109, this is the big number. If we get any pullbacks, 109.70 is going to, more than likely be a support area to buy. The 240s, this is really weird that this is setting up like this. A really, really tight range right before the report, 112.38, 114.08. Probably that's going to be a day trading situation during the day until this report comes out. We got to take a look at Caterpillar. And that's a decent move for the Dow in itself. But, you kind of saw this coming. I mean, the dollar, this thing is really, really, sales international, blah, blah, blah. So, predicated. They have manufacturing plants in the U.S. for the most part. And the dollar is severely affecting this particular thing, plus some global growth issues, I would assume. And technically speaking is what I'm interested in. We are now well below unfair lows on our, and this was a weak stock in a strong market for a long time. Trying to find inflection points. We were kind of paying attention to this. Right now, pre-market, we're trading 79.40. And, there's nothing to really grab onto down here, so I don't know if you should be looking to catch a falling knife on this one until we get some new information, namely some new longer term inflection points, because the market in itself, these currency wars, big currency moves usually predicate large stock market moves. So I think this is kind of a wait and see on Caterpillar. I wouldn't jump in just yet. We'll be right back, folks.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Still got Caterpillar up here right now. Somebody was asking offline a little bit about this. What should you do? Should you just try to take a shot and buy this thing? You know what? There could be some more shakeout, especially in the opening here. That's just kind of the general thought process of just kind of a wait and see when something big happens like this, a big haircut on the stock. So I just wait and see. We're more than likely going to again get some new inflection points on the daily. That's the kind of time frame that I'm a big fan of, and we'll just have to kind of sit tight. I mean, I don't you might miss a couple of points if it just somebody starts buying this thing up, but these things are just like throwing darts at a board, those type of trades. All right, crude oil. Okay, what the heck? Okay, this is the March contract. Okay, all right. So again, we short term. Regulating the trade down the 240s, 46.33 was kind of the, looking back in time, is the easy pick selling point type thing right there. Right now, I'm actually not a fan of selling crude oil anymore. This XLE has been climbing. We've been talking about that. Now we've gotten above the targets, 77.15. This morning we're trading 77.30. So, I'm starting to see some green shoots, if you will, on the crude oil scene, and to be honest with you, I think the risk now is to continue to sell crude oil. And again, I like buying the XLE as an alternative way to trade that, but and we talked about that above 74.18 here on the weekly, which has been really, really, painless for the most part. But crude oil, as people start going out of business, people stop pumping oil. People lose their jobs, blah, blah, blah. The Saudis are going to have to make some decisions. Russia's sitting there. This is fundamentally speaking something where we could have a market turn, and I'm not saying we're going to have a market turn back up into a 100, but everybody's gotten so daggone bearish on crude oil. Fundamentally speaking, that in itself, as far as news wires and things like that, that in itself seemingly has almost stopped this thing from going down. And I think we're due some of those $5 or $10 a barrel rallies at this stage, and just start getting some of those people who have jumped on the bandwagon late out of this trade, at least for the short term. So we started down this process around 100. I want to pull this back up. We started down this road around 100, and there we go. We haven't had a lot of technical reasons, as we've talked. This is just sick. I can't believe this. We haven't had a new profile appear on the weekly, but that tells you something in itself, that there's been, no extra demand areas appearing down there. Therefore, not a lot of reasons to buy this thing. And I understand we're still trading below profiles here. But again, I think, sometimes as a trader, sometimes you got to, believe it or not, know when to start breaking the rules a little bit. This XLE's kind of poked his head up. Crude oil's kind of stopped going down in the interim, and we may go down to the 30s like they're, some of these guys are preaching. But I think the risk now is to be short, and I think this is a wait and see to see if we can get back above 48.23, and if we can get a close above 50.86. I think you got to use that as support. Now, again, you can take some shots down here, put some trailing stops in, whatever. I don't advise that. Advise waiting for at least a close above 48.23, and especially a close above 58.86 to get some confirmations that we're going to have some technical damage that the shorts are going to have to pay attention to here. But right now, don't see any reasons to continue shorting this thing. Excuse me. Financials. We got to take a look at this really quick. Pre-market looks like we're trading 23.80. Hadn't been a big fan of this. Actually, I'm not saying going long crude right now, Oda. Yeah, I'm just saying don't short it anymore. I'm saying pass on the shorts for right now. And going long means waiting for some of those confirmations above those inflection points, that 48 area, and then the 50 area will be just almost a crying situation for the shorts. Okay, cool. XLF, I've kind of been a big fan of going short this. Here's the situation. You've got a new inflection point area, 23.79, that if we can get back down below there, and there's that 23.70. I took a shot as a retracement back up into there. I got burned a little bit there, but if we can get back down below that area, I think we're going to have some clear sailing on the XLF south again. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, got some economic news out. Obviously, the 8:30 announcement here, and we're looking at the notes and talked about not going short these things ever. This is one of the reasons. Now you got support 129.29 on the 10-year. Caught some support on the bottom of the 240s, 129.18, 129.11, 129.12 yesterday, and looks like we're going to head a little farther north here. Obviously the stock market does not like these numbers. Let's see here, let me read something. Okay. All right. Okay, so here we go. 2027, talked about that area being very, very important. We're there. And this may, if you're going to try to take some shots here, this was the kind of the waiting area. We talked about 2052 down into 2027. And again, make sure you put your stops in. I know we've got the 240s down here, 2023, but I'm kind of ignoring that right now. 2027 is something, you're going to have to give yourself a little bit of a noise factor around those levels. But, these are, if you're going to pick battles here to try to do some day trade bounces, this might not be a bad area to take a look at. So that's the situation on the S&Ps. Let's take a look at see here. Let's take a look at the NASDAQ. And right now the NASDAQ 4210, we talked about that big number there. This is going to have to hold. We're trading 4204 right now pre-market. What do you do with this? Similar situation with the S&Ps. You kind of come down into an area of support. But again, the rally yesterday was just, especially at the end of the day, just kind of blew me away. I didn't think we deserved to do that. So the discounting of most of the fluff yesterday may not be in the Dow down 300 numbers right now. We've got a big snowstorm in New York. There's not a lot of people at the post up there on the floor. I don't know if that matters that much, but again, you got to kind of factor all this in right now when you're talking about trying to take some stabs at some longs. But again, the range definitely, the big range is 2052, 2053 down into 2027. We're trading 2026 right now. All right, so that's the day trading scene. Here we go. Pull this up. UTX, again, strong stock in a weak market. You got some support. This is kind of a waiting game now. 115.92. Let's just call it 116. Somebody was asking me about that, and I think all this stuff's a wait to see until you see how the stocks open up here and shake out a little bit, and seeing if the S&Ps can kind of get off that 2027 area to try to start thinking about any longs, and then try to identify with the scanner, what's holding up as far as profiles go. A couple other things coming out. Amgen, we'll take a look at that. Again, in that, let's see, 157.50 pre-market. Targets above 164.05, and Amgen's going to be out after the close today. So the major inflection points to pay attention to are 153.50 and to 156.24 for any volatility for support on this particular product, and targets above 164.05 more than likely is going to be the upper limit for this particular stock. Let's take a look at AT&T. This is also after the market today. And the S&Ps, just to give you some updates, still around 2027. AT&T 32.96 pre-market, so we're right back down at daily unfair highs and weekly unfair lows, that range in there. Somebody was asking about this about a month or two ago. Is it time to buy this thing again? And now you're kind of getting back into the heart of the matter when it comes to inflection points lining up. We talked about waiting until this possibly came back down into some lower areas. So you've got 32.27, 32.40. If we get a, some kind of news that's not that appealing to the stock, I think you got a chance to buy it down here, 32.27 into 32.48. That's daily unfair lows and weekly unfair lows. Okay, but I think this is, again, wait to see what happens after the report. God, there's a ton of stocks coming out today. It's hard to cover them all. Just trying to find the ones that were on the scanner situation here. Lockheed Martin. This is some of the tradable household names. Okay. And Lockheed Martin is before the market, so it looks like we've come out already. 192.40. And here's the big support on Lockheed Martin, 188.93. That's what we're looking at here on Lockheed Martin, 188.93, just to wait patiently until that happens, and you got a support area to take a look at. Okay, I think we've got a caller, Victor from New Jersey on FCX. Are you on, Victor?
Yeah, I'm looking at FCX. Their earnings just came out. They're looking like they're hitting their yearly low again today after the opening.
Okay.
What should I do with that? They going to suspend their dividend again, or?
Fundamentally speaking, Victor, I'm not a fundamental guy, and I'm not even aware of their dividends right now.
Yeah.
But that if they've done it before, it seems like to save money.
2009, yeah, for 1 year.
Yeah, that could be in order. FCX, I used to trade this back in the day. I didn't know it was actually, I haven't looked at it in a long time. My goodness, it's down to $18. Okay. All right. Well, I guess we're going to talk about, what should happen at this stage. You got 1809 pre-market. You got 1843. To be honest with you, Victor, this is something, it hasn't, really giving you a lot of reasons over time. I know you probably don't want to hear this if you're a long-term investor.
No, I'm thinking about buying it. That's why.
Okay, great.
I want to buy it at like I think it was $8. I'm checking it right now. In 2008 and 9, it went down to $8, and there's some gaps there, so maybe it'll fill them.
Well, you know what? I mean, probably the prudent thing to do would be to wait for it to technically. Kind of if you're looking at my screen, I don't know if you are, since we've been at around 38.40, we haven't really had any technical reasons to buy this thing except for maybe a little shot that happened around 30, and then that was a short-lived situation. I don't know if you want to hear this, but I'd love to see it either get back above 20 or as it goes lower, if it doesn't do that, wait again for a new profile to appear, and then possibly buy it a little bit lower at when it breaks above a new profile.
There's a gap here, right, in March when the market started taking off March 3rd, March 6th in 2009. There's a gap there from like $11.50 to $12, $13. You think it'll fill that gap maybe?
What year was that?
2009, March 2nd. Right around that area, there's a big gap right there. There's some gaps in it, all the way down to $7.
Yeah, you know what?
It's a high volume day right there. You got like 11.57, and then the next day it opened at 12.62. So maybe it'll fill that gap, or no way? It's close.
Well, you know what? I'm not. I mean, I'm definitely a technician, I guess, but I'm kind of just looking at the simplicity of our market profile kind of derivatives right now.
Right. You think it's going to go to 20? It's not going to keep on going lower?
Well, I mean, what I'm saying is we're going to open around 18. That's a fact. Right. And that being said, that means we're definitely below profiles again. Our most recent profile, which the profile low is 1843 on this stock. Now, the real technical reasons, in my opinion, to start buying something that's showing some technical strength would, for this thing, it would have to close above 20 at this stage on the current profile. Now, what could happen is as we gap down a little bit lower here, we could have a new profile appear lower in the next couple of days. Then we'd have another lower launching point other than 20. So I tell you what, I'm going to keep an eye on this personally for you, because this is kind of an interesting situation, because I'm finding it hard to believe that FCX is that far south right now.
There's a lot of gaps on this thing. I'm telling you, the whole stock market, if it follows this stuff, the whole market will retrace. Yeah,
well, I tell you what, I will.
There's a big high volume day right there on March 4th in 2009. It's super huge, and there's a huge gap there from 11.68 to 13. But you don't follow that stuff, you said, right?
Yeah, no, I mean, that's kind of way back. I mean, I'm just looking at the real black and white, the way I look at it every day with these profiles, and it just keeps it, that keep it simple, stupid kind of thing for me, because in my opinion, if I start looking at too many different things at one time, I can't seem to pull the trigger or make a really concerted, convicted trade. So what I do, so that's basically right now 20 is the number to get above to start looking at this, because
don't touch it. You're saying don't even look at it for a while.
Not right. I wouldn't look at it yet. I mean that's my opinion, just kind of bird's eye view here.
I heard it's a great company. That's why I'm going to look at it again. You can make a lot of money with this company, I heard.
Yeah, I mean, Tyco was a good company too. There's some.
That's true. You think the day is over? They can restructure something.
You know what's weird on that thought? It's weird. I mean, I'm not saying this is gonna happen to FCX, but it's weird when stock prices go lower and times get tough and the fluff's not there anymore. Sometimes people start finding things in the books of companies, not like this, but things may start surfacing. You can
cook your books. Any company can cook their books. They can make money or not make money. I'm convinced they can do whatever they want. Like GM, they can go bankrupt 3 times. Yeah.
Exactly. So 20 is the number right now, and that's I'll keep you updated if you want to keep track of this with me.
Yeah, I listen to you like every morning, so I'll listen.
Thanks. Well, I'm sorry I don't cover a lot of stocks in general. I kind of cover the broad currencies and markets, but I'll just throw them out there. I'll take a look at them. I'm sure everybody will benefit from that.
Because oil's going lower, FCX is going lower, so I don't know. I don't think we have a bottom yet.
You know what? I'm not so sure oil's going to. Everybody's kind of jumping on the short bandwagon with oil. I'm not so sure that's going to happen in the most.
You ever go to Zero Hedge, the website? He has some good, interesting articles on oil today.
I'll take a look at that. I haven't. I mean, I'm glad.
3 good charts on it showing you how you had 3 bubbles. No,
Okay.
oil's going to go back up. All the big shots, all the government, all the politicians own oil.
Well,
You know what I mean?
I mean, just the fact that my sister drove up from Atlanta yesterday and she said she paid $1.70 something for a gallon of gas. I'm like, yeah, that's ridiculous.
It could be cheaper because our health care went up like triple ever since Obamacare. So who knows?
Yeah,
it's just to make you feel good. You know what I mean? And then they screw you. You forget about it.
Well,
Oil will be $4 a gallon in a few years.
I don't see the guys who control the energy source for the planet just allowing people to just stuff money in their pocket like this too much longer. But anyway, that's just a glancing thought.
Right.
Well, I appreciate you calling in, Victor.
All right, thank you, sir. Have a good day.
All right, bud.
Bye.
Yeah, thank
Bye.
you. Okay, bye. All right, here we go. Seems like we have another caller, Daisy from Denver. HEWG. Daisy, are you there?
Yes.
Are you the one that called in about AT&T a while back?
Yes.
Yeah, that's still kind of a wait and see, I think.
Right. I heard you.
Okay, great.
And you had mentioned, Europe and the QE and all that sort of stuff, and hedge fund ETFs. And of course, there's EWG, that's Germany, but this one is HEWG, which is a hedge. And wanted you to check that out if you could.
Now, I'm not too familiar with this. Can you just refresh my memory exactly what this is?
These are ETF. I found a bunch of ETFs on TD Ameritrade on their Minionville, and they had one for Germany and one. There was a DBEU, and there was a HEDJ, which was Europe, and yeah. Well, in fact, HEDJ looked like it was doing better. That's Harry, Edgar, Don, John.
Okay.
So they're funds, they're ETFs for Europe, and they're going up.
Okay. Okay. It says it's a way to manage currency risk in a German stock allocation. May benefit from a strengthening U.S. dollar relative to the euro, but will also be affected by a weakening dollar. Okay. Now, let's just kind of look at the dollar really quick, and then we'll kind of come back to that. Let me pull the dollar up. Now, yesterday I started talking about the dollar possibly seeing, possible temporary highs here. We got a big volatile situation, and unfortunately, in my opinion, you can't buy the dollar again until we reach 93.67. We're trading about $1 higher than that right now. That's obviously a kind of an amalgamation of quite a few currencies. Some of them, the euro, the pound. That being said, going back to HEWG, was that it? Okay, yep.
Actually, I should have given you HEDJ because the Europe fund looks like it's doing better than the Germany fund.
Okay. HEDJ.
Right.
Okay. HEDJ. Okay. HEDG. There we go. Got about 5 seconds here. You want to hang out?
Hang on.
Okay. Yeah, because it's down this morning, and that's relative to the dollar. We'll be right back, folks. We'll cover this.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, welcome back to the show. Daisy, are you still there? Hello?
Yes.
Oh, hi. Okay. All right. So the definition of HEDJ, just for the listeners out there, and here's the chart situation. Fund will seek to track the performance of the WisdomTree Europe Hedged Equity Index. The index and fund are designed to have higher returns than an equivalent non-currency hedged investment when the value of the U.S. dollar is increasing relative to the value of the euro, and lower returns when the U.S. dollar declines against the euro. The fund will invest in stocks of European companies with significant revenue from exports. So, as you know, the European market's been just on fire. If you look at the DAX, it's just been insane. I mean, I've been telling people not to short that thing. You got a euro currency situation that's affecting it in a good way, and it's just revaluing itself to, I hate to use this term, but crappier euros. So this is the same situation with this. That's why I made that analogy. HEDJ is obviously been benefiting from a stronger dollar, weaker euro, and investing in stocks at the same time that are going up. So it's kind of getting a double whammy there on the upside. But again, right now, I think we've got the dollar. Talking about, yesterday we talked about taking a break from the dollar.
Right.
We got below 95. That's obviously going to affect us a little bit. So we're trading 60-50 pre-market. So what do you do with this? Considering that I think the euro is ultimately going to go lower, and that means the dollar's probably going to get stronger against the euro. they're trying to make some amends here. They're going to throw everything they can at the situation in Europe, the Draghis of the world and the ECB. But these things don't go in a straight line up all the time like it's done recently. So again, I told you to wait. I was waiting to see on the AT&T. You're calling me when this thing's on the all-time highs here, and considering that we're coming back into the 60-50 area even right now today, and the dollar may have a chance to retrace back to that 93 and some change area, and it's I think we're trading 94 and some change right now. This is kind of a wait patiently. We're more than likely going to get a new profile on HEDJ daily wise, and we're going to have a new support area on this. And I think that's the situation you got to look at, is wait for that new support area to appear on the daily, which hasn't happened yet, but we're probably going to get that pretty soon.
Okay.
And if you want to know something about it, just email me or call back in, and I'll show you exactly what's going on with the chart.
Thank you so much.
You're welcome.
Bye-bye.
Thanks, Daisy. All right, guys. So we got about a minute left. We're just going to kind of rehash some of the usual suspects here. Euro, talked about this not being the gift that's going to keep on giving on the downside. Eddie and I were looking specifically at these 60-minute to 40-minute lineups the other day around this 111 and some change. For a little bit of a pop here, there's the 111 and some change on the 240s to do a contra trade. And we talked about a gift, hopefully getting back into the 114.36. That's the target right now on the euro, and that's the area you got to wait for, in my opinion, to put any more shorts on for this particular product. And that's a 300 pip move straight up, basically in a day or two, if that happens. So that's something to pay attention to, and that's the next level to short on the euro. Pound, talked about this earlier. This is kind of a stop out for me right now. Was trying to leverage off that 150.90 area. Happened and worked for just a little bit there. All right. Okay, guys, we got 1 second left. We're going to go to the break here in the show. Steve Rhodes is next, and we'll pick it back up tomorrow in the morning. We'll see you again, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.